Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In our today's session of automated trading, we will try to complete our setup using a Fractal and awesome oscillator. This is a technical description here. By now I hope you are well familiar with the functionalities of these indicators with which we are working. The awesome oscillator, then we use the min-max as well, and of course one of our favorite, the ATR. Before we get started for the day, there is a standard disclaimer. Here I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. And if you want to use any of it, I would recommend that you do extensive trial runs for many months and even maybe years. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. With that, we get started for the day. The setup is fairly simple, with which we have done our algorithmic system development for last two sessions. Here is a brief recap of what we are trying to achieve. We want the buy trade to happen when these minima and the maximum values are rising, and that buy trade should happen only when the positive values of the awesome oscillators are rising, and it should be in vicinity of this minimum value of this fractal. And for that we are bringing in the last historical candle and of course some pending order open, which will use the ATR to get on the lower side compared to the last hour's candle closing level. So let us get to the Visual JForex platform to see what we have done so far. Here we did the standard instrument subscription. The position amount has been defined at 0. The fractal block for the minimum and the maximum values. The awesome oscillators, which will help us determine the trend of the underlying instrument. The min-max levels also will be put to the similar use, and comes the ATR for optimizing purpose. Here we got this historical candle hourly data to see how last hourly close, and then with the help of that determine the precise entry and exit point. This is to define a single point of action for the algorithm. And then we define this 10% of the ATR as our point of entry from the last closing levels. So if we are going for a buy trade, we will be deducting the 10% of the ATR from last tick price. If we are going for a sell trade, we will be adding the 10% of the ATR. So here there is 0.1 multiplied by ATR value. We will be adding that value for a sell trade to happen. Then we did this stop loss and the target price levels. Here we have defined, but we are yet to do the type conversion. Here we will do that once we get the pending open orders blocks. And we have also done the work on the buy side. In today's session we will try to finish the buy side, and then we will start working on the sell side. And the sell side will be symmetric, just the direction of the trading requirement will be inverse of what we are doing for the buy side. So let's get started. We have done here these positive values of the awesome oscillator which we need to be rising. So we have defined that, and the maxima should also be rising, the minima should also be rising. So let us take this if block and connect it. We are comparing the current values of the maxima and minima to the values 29 hours back on the 30 hours time period. So here we do, it should be greater. Now we go back and see to it that we are taking into account the define levels. So here we will also need to compare the last hour candle closing levels to the fractal minimum for defining the trading requirement for a buy trade. Here we have done these awesome oscillator values. So now we take the last hour's closing level. So we will need the candle 24's closing level auto created, and there is a candle 24 and we take its closing level and then we compare it to the minimum value of the fractal. So here we are. So on the chart it will look like this. We are taking in the 3 bars on the each side. So let us take an example. Here I think these positive values are falling, so we will need maybe somewhere here the requirement might be fulfilled. So time is 0. No, not here, it's not going to work. Maybe here we will be placing a pending open. It won't get executed as we see the price continues to rise and it doesn't really get lower. So regardless of that, our system will be placing an order. So here the condition looks like it will be fulfilled. So what our algorithm will do, it will check on these awesome oscillator values, then the min max values both are rising, and then it will consider the last candle close 3 bars after, and this minimum value, it is of course this closing is above this minimum value. So that now it will deduct 10% of the daily ATR range and it will place the order lower than this closing level, and it will be valid for say 1 hour or 2 hour. You can decide on your own. For us, we will keep it valid for 2 hours, and then if it gets executed in 2 hours, well and good, otherwise it will expire. So let us do that. Now this flow should be greater. Again we connect the flow. Now one thing remains, and that is the precise entry point construct, and for that, to make it a single point phenomena, we make it this way, and we'll be comparing this value, the candle 25 and candle 26 closing levels with candle 24's closing levels. So 1 minute back the price was lower than the candle 24's close, then it began to rise, and the next candle closes above this prior candle's close, the candle 24's close, and so our algorithm is ready to place the order, and that will remain valid then for next 2 hours. So we take the candle 24's closing level and first candle 26, which should have closed lower than the candle 24, and then the candle 25 should close higher than the candle 24, which means the price is rising. We got this candle 26. We take one more if block, and here we do this. It should be less, and next comes candle 25, closing level, and we take candle 24, and now it should be greater. The candle 25's close should be greater than the candle 24's close. Now is the time to bring the pending open order, and it will be a limit order, so we make it by limit. And it should be greater. Okay, now we will need to do the type conversion as well, and we also need to define the order validity as well. First we do this. Here we put in the buy price, which is elastic price reduced by the 10% of the daily ATR, and then here we have defined this target difference and stop loss difference, and we have gone in for a ratio of 1:2. So here is going to be 20% of the daily ATR, and target price is going to be 50% of the ATR, and we will now need to take this out, and we define slippage as 2 pips. 2 pips is good enough for USD JPY, and here we create a new variable, the SL. We name it as SL. Now start value, it will be the result of the calculation. So we take this here. This is in integer, as you can see, type integer, and this is in double. Those who are well familiar with the Java programming might know what difference it can make in any program. And we do the fresh creation here again, TP. Okay, and we do this. We bring in the target price. So here we have fulfilled these two requirements. Now is the time to define the order validity, for which we will need to do the fresh calculations. So we bring in the calculation expression block. Before that, let us get it aesthetically right. We will place the blocks where they belong. And then we we should have done this like this. Okay, and here comes so now we go back to create a new variable, and which is going to be the calculation expression, and here we define the order validity. For that we need to take elastic price, and the elastic price is here on tick. We take elastic price. No, we will need elastic time, not price, so pardon me. Tick time, and now we need to create two variables here. Create new variable. We will name it t, and it will be 3.6 millions. 3.6 millions. I hope I have got all the zeros right. As far as I can see, it is. So we take this variable 3.6 million, and we want the order validity for 2 hours, and 3.6 million stand for 1 million. Those 3.6 millions are ticks, so that means the reiteration of the algorithm will happen 3.6 million times in a 1 hour. And if we place a fresh variable, we say OV at 2, then the validity will be for 2 hours. So here I hope you have got the point right. This value is of the ticks in a hour, and here there is the order validity for 2 hours. If you make this variable, if you change it to 3, then the order validity for 3 hours. If you make it 4, then the order validity will be for 4 hours. So that's it. That's the way how it works. Now we connect the flow here, and we got result of the calculation. Now we have to create a fresh variable here, which is in the long format, date and time. We name it OVT, order validity time, and we save it, and its value, its result, it will be the result of the calculation here. We got the OVT defined. We we didn't write the function, and it should be A1, the MS Office convention, A1 plus A2 into A3. So that is, we will be adding the 3.6 millions multiplied by 2 ticks to the last tick time, and that will yield us 2 hours. So this is it. and we join the dots and we connect the flow to this multiple action block, and here we get okay. So as you can see, the tick time thing is working, and we got it done. So our buy setup is complete for the day, but I don't think we will be able to finish our sell side in today's session. So what we do, we start a fresh tomorrow's session for the sell side, and then we will be finishing it off and do the test run as well. So here is our buy side, which is now complete, and all we are left with is to develop the sell side. So here we got these conditions. The awesome oscillator's positive value should be rising, and then we got the minimum and the maximum condition. Both these values should be rising. The candle closing, last hour's candle close should be above the minimum value, and then as and when the price starts to rise beyond this last hour's candle close, we will be going in for a buy trade with defined stop loss and the target price levels and the order validity and the buy price as well. So this is the buy side of our setup. So here I will be signing off. We will be back tomorrow. Have an excellent day ahead. See you tomorrow. Goodbye.